Today, I want to talk about how a broker or trading platform has finally blown the whistle on the existence of synthetic shares, and how it seems that Citadel is not only paying off the SEC, but is also paying off the courts as well. So stay tuned and let's make some money. And now I'll dive straight in with the key information. So, MetaMaterials tweeted saying, breaking news, the brokerage firm TradeStation confirms a share imbalance and potential counterfeit shares in mmtlp. TradeStation have said the NBH certificate that TradeStation received excluded a large number of NBH shares that have been lent out to other broker-dealers. And this means that we will not be able to honour some of our customers' requests to register and record their ownership in book entry form with AST, because the shares are not backed by a physical certificate. So just to digest and explain what this is, AST is the American Securities Trust Transfer Company, very similar to ComputerShare. This is because mmtlp holders wanted to DRS their NBH shares. Instead of leaving those shares with a broker, they wanted to transfer them or DRS them over to AST. But TradeStation had less shares on their books or less shares given to them by the DTCC through a certificate than their customers actually owned. And therefore they could not transfer over the requested customer shares to AST because a number of those shares on their trading platform weren't backed by physical certificates or real shares. AK TradeStation has openly admitted to holding synthetic shares or synthetic securities and therefore could not transfer those over to AST because they don't exist, because they're synthetics. What's also pretty crazy is I wonder just how many users of TradeStation that were holding mmtlp or NBH shares who haven't actually requested that transfer. For example, TradeStation unknowingly holding synthetics and maybe even only 50% or 25% of their mmtlp holders requested that transfer. So Meta News has explained, saying for clarification, each brokerage firm is given a certain amount of shares. When combined with all brokerages, the total amount of shares are supposed to equal the amount of NextBridge hydrocarbon outstanding shares. But obviously TradeStation admits their firm exceeds the amount of shares they were allocated or given by the DTCC and can no longer transfer their customer shares to AST. And saying in my books, TradeStation is the first transparent broker to admit the counterfeit shares in mmtlp. And what's interesting about this is Ralph Norman from Congress has tweeted saying there's over 70 co-signers on my letter this morning to FINRA and the SEC concerning mmtlp. That's not just 70 random co-signers, that's 70 other members of Congress that have all signed this letter to FINRA and the SEC. Now obviously this letter touches on the U3 halt, it touches on synthetic shares, it touches on short sellers and how they did not close out of their short positions, and much more. Obviously I'll leave the link to this letter in the description below, but what is interesting is this letter has 70 co-signers of other members of Congress. And obviously what's even more interesting is that Ralph Norman was actually live speaking to Charles Payne on Fox Business. We also had another brilliant day in the Millionaire Mindset Trading Group. We started the day with KTRA, which ran 82%, and RJ's locked in 40%. We then moved on to some SPY trades with Bjorn locking in 100% gains, and Wade locking in 422% gains. Remember, there's just 2 days left of the Christmas sale where you can get 25% off your first month or 4 weeks for the price of 3, using the code CHRISTMAS, all in capitals, at the checkout. And remember, these guys are paying off their monthly membership, hey, even paying off their entire lifetime membership in just one trade in one singular day. And on top of that, there's also the 100% guaranteed 30-day money-back guarantee if you don't make a profitable trade in 30 days. So guys, be sure to join the Millionaire Mindset Trading Group using the link in the description below.
So this morning, my next guest sent a letter to Gary Gensler, chair of the SEC, and Robert Cook, CEO of FINRA. He's asking both organizations to review events that are surrounded MetaMaterials Series A preferred shares, we know as mmtlp. Joining me now is South Carolina Congressman and member of the House Financial Services Committee, Representative Ralph Norman. Representative Norman, your letter notes that you've received over 40,000 letters from concerned investors regarding the halting of this stock, the level of shorting. Have you ever seen anything like this?
Charles, I really haven't.
Back on September 28th, you had a chance to ask Gary Gensler if he was familiar with mmtlp. He played it very coy. He said it, quote, not very deeply, although I thought it was ironic because he did mention the stock during a hearing on the 13th of that same month, where he said he could not confirm nor deny if there was an SEC investigation. So here we are again. You're writing them once again. But again, I'm trying to figure out the bizarre behavior on the part of regulators in this case.
Well, Charles, we had him in a hearing, and he tap danced around it, like you said. He knew exactly what was happening. And FINRA, as you know, works for the SEC. Gary's supposed to know about it. When you have the members of, I think the VP of the OTC not knowing why the shares weren't traded, when you can't find out what shares exist, if any, there's no excuse for this. So he's paid to know about this. And, their mantra is to protect the public. And he can sure find out about this. But as of now, no response. We're asking had 16 questions, asking for answers at the end of the end of this month.
But how can people have trust in a system that, to your point, is more focused on ideology like ESG than whether, people can simply buy it? The Wall Street Journal dissed the shareholders of mmtlp, suggesting that the trading halt was their fault because it's a risky stock. Is it the role of FINRA and the SEC to stop stocks trading arbitrarily because they think they're risky? That's not their role. How can people trust the stock market?
Well, under this administration, they can't. And to get no answers from Gensler, to get no answers from FINRA, it's unacceptable.
So what I really took away from that interview is that over 40,000 people have actually already written letters to Congress. Now that's just specifically for mmtlp and doesn't include the people that have also written letters regarding AMC, GameStop and other stocks as well. And that also then doesn't include the large majority of people that likely or potentially haven't yet written a letter to Congress as well. So that really says to me this whole meme stock crowd isn't just the 3.8 million or 4 million AMC retail investors, but that number total worldwide is likely pushing 10, 15 or 20 million people invested across various meme stocks. And that really goes to show to me just how big this movement is against these short sellers and market makers. But as I said, so Citadel are paying off the SEC and likely the Department of Justice, but now it seems they're also paying off the courts as well. So you may remember a while ago, Northwest Biotherapeutics filed a lawsuit against a number of various market makers like Canaccord Genuity, Citadel Securities, G1 Execution Services, and others. So this screenshot or document here says pending before the court is the defendant's motion to dismiss the plaintiff's amended complaint in its entirety. For the reasons set forth herein, the court respectfully recommends the defendant's motion be granted due to the plaintiff's failure to adequately plead loss causation. So the courts are saying that Northwest Biotherapeutics hasn't adequately provided enough evidence they suffered losses as a result of these market makers. Which to me sounds like absolute baloney, as Annie pointed out, because Northwest Biotherapeutics submitted 3,000 pages of documentation. 3,000 pages of evidence evidencing spoofing, manipulation, synthetic shares, and other illegal activities. But yeah, apparently according to the courts, that's not enough or doesn't adequately plead loss causation. Either that, or maybe the judge, or maybe the courts themselves are in the back pockets of these market makers and throw out any lawsuits against them willy-nilly. And that's likely because of the revolving door between the SEC and these regulators and hedge funds and market makers. You can see as a prime example, this is an employee who between 2013 and 2018, so for 5 years, was a senior advisor to the chairman at the SEC. And then instantly moved across to become the managing director at Citadel and then the head or lead of general counsel at Citadel Securities. Literally taking one step from the SEC doors to Citadel's doors the next day. Now that to me is absolutely awful that a top employee at the SEC can go straight to Citadel and bring all of that knowledge and all of those secrets. But something that is very interesting is how bad of a position these market makers and these short sellers are actually in. And that awful position was actually highlighted in this year's annual Stability Oversight Council report. Unusual Wells has tweeted saying the US financial system is a minefield of vulnerabilities, per the Financial Stability Oversight Council annual 2023 report. Now, to me, a safe and secure financial system would not be described as a minefield of vulnerabilities, which alerts to me potentially the entire US economy, or at least the US financial system, is in a bad spot right now. And that likely means going forward next year, we're likely going to see a lot more banks and market makers being margin called and collapsing. And finally, Seagrass pointed out saying the one thing I don't get is why so many people hate Adam Aron. Adam Aron isn't responsible for AMC's price being manipulated. That responsibility lies with Ken Griffin. Really, instead of directing your anger towards Adam Aron, who has no impact or control over AMC's share price, because remember, Ken Griffin sets the price of stocks, we should direct our anger towards Ken Griffin. Adam Aron doesn't set the price of stocks on the market. Adam Aron isn't the head market making honcho. Adam Aron is just the CEO of a movie theatre company. Remember, it's Ken Griffin that controls and sets the price. But as Retail Stocks pointed out, Adam Aron is responsible for a number of positive things for AMC. Adam Aron did not let AMC go bankrupt. He steered AMC through the 2020 lockdowns. He implemented tons of new revenue streams like popcorn, concert distribution, partnering with Taylor Swift and Beyonce, adding candy, beer and wine, and much more. He's reduced debt, he's reduced rent, he's engaged with retail investors, and he's given us ownership in a gold and silver mine before gold and silver hit their all-time high prices. He's delivered higher profits, higher revenues, higher cash flow on less movies than pre-pandemic. So before directing your anger towards Adam Aron, really, the person or people we need to direct our anger towards is these market makers. So guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.